Hey, folks, good afternoon. It's about 4 o'clock Eastern time. And so stocks are going to close to the upside for a change. And even bonds had a really good day. So to recap, the big news today was this Wall Street Journal article, which in ours, a lot of times the Wall Street Journal has been like a mouthpiece for the Fed, where they kind of threw out there, hey, maybe we're going to do a 75 basis point rate hike and slow things down at further meetings. And there's debates as to how to kind of share that with, in their communique. So that Fed meeting, we know we're going to get a 75 basis point rate hike in 2 weeks from yesterday or 2 weeks from this past Wednesday. But now it's what they're going to say. So that's going to be fascinating. Looking ahead, we have GDP and we have PCE next week. Those could be big market movers. But the idea, that's in addition to that article that came out, we had a couple of Fed folks, Evans, Bullard, Daly were out. And while they're still hawkish, they left a little bit of room. There's risk to overdoing it and slowing down the economy. Obviously, Bullard, who I think is probably a little bit more respected out there, kind of second in line to Powell when it comes to listening to what he has to speak, because in hindsight he was a little bit more accurate as to how things have played out. He was a guy calling for big rate hikes early on, even when Fed were saying transitory. So he's even backing off, talking about how rates are restrictive already. So we're getting, it feels like, closer to the end of certainly the 75 basis point rate hike. So we're going to get a 75 basis point rate hike on the next meeting, and then hopefully we hear that there's something less. But today was a good day, and you have to look at the 2-year note, because the 2-year note also front runs the Fed activity, right? And that was up at, you can see that's a big decline in one day on 2-year note, and the 10-year note also hit 434, which was a 15-year high, and back down. So it was a good day. And obviously, when you look at this pricing, we're up 47 basis points on the day, but what's important to you as originator is what has happened since I've received my rate sheet. And we're up 72 from just 9 o'clock. So it was a big change. It was literally from the lows. Like if you look here at the chart, it was over a 100-point reversal from the low. So it was an absolute crazy day. So anyway, you still have to lock loans where you can. High volatility, but it's a market still trying to find a top, right? A peak in rates and a pricing bottom, and it's going to be noisy. It's going to be volatile. And the good news is next week we will have we got a lot of Fed speak, and we've had a lot of Fed speak, and jawboning has been a major tool of the market. Well, next week that's quiet for a change, which is good. So there'll be no Fed speak, but there'll be a couple of big reports that we're going to have to watch. I hope this finds you well. Have a terrific weekend. And what I'm going to do is spin up a video, like an MMG kind of quick start video, to help walk through some of these features. Because even here, I could show you, like we do this market news now. You go here, and we even click it to an article, so you can see a little bit more of, you can kind of drill into this, and you could share it. So I think we're on to some really good stuff with this. I hope this finds you well. Have a terrific weekend, and we'll be talking to you soon. Bye for now.